Hey traders, in today's Forex market preview video, we're going to discuss a few longer term ideas on the euro dollar and the dollar Canada, as well as an at market trade on the euro Aussie. Hey guys, Akil Stokes here, Forex trader and head trading coach over at tradingpower.com, and thank you for joining me for another Forex market preview video. This is a weekly video that I do just looking at a few pairs that are on my radar for the week ahead and really kind of giving you a heads up about what's on my radar. Hopefully giving you a few educational tips as well. We're going to get started today with the euro dollar. And this was an interesting pair. Obviously, if you've been paying attention to the news lately, there's been, or the markets, I should say, there's been a lot of strength in the euro. I don't think that's necessarily what they want right now, as they've been trying to take a more dovish approach to kind of halt these rallies, but the market wants to buy euros, and because of that, we've seen some pretty big moves within the last couple of weeks. And those moves caused a really good discussion over the past weeks about where is the euro dollar likely to go, and it brought up a very valuable lesson. I'll actually move over to a Ninja Trader chart and show you this. Do I have my DSRs up? I don't think give me a second. I'm going to load up my DSR indicator. This is my dynamic support and resistance indicator, and I'm going to load it up on a weekly time frame. So right now I'm on the daily chart, just giving you a bigger look at what price action is doing. This is typically my higher time frame, and I want to place my dynamic support and resistance indicator off of the weekly time frame because the weekly chart is one above, at least for me, it's one above the daily chart. And a lesson that I learned very early on in my trading career is to be careful, I guess for lack of a better term, around double levels of structure. And overlapping levels of structure are something like this. So you can see price action is making our way to the top of a previous price channel, right? And we have a previous structure high right about here at 116. We have another previous structure high a little bit higher right above the 117 level. And the discussion we had this week was, where is price action going to run into before it finds resistance and potentially starts to reverse? So where is the next selling opportunity? And we had a handful of traders saying 116s, Akil, 116s, look left, structure leaves clues. And it could be a few different elements. It could be the fact that maybe they were zoomed in on their chart like this and all they saw was this level of structure. Or maybe they were on a lower time frame and never went to their higher time frame for a bird's eye perspective of the market. But if you went and zoomed out on the chart, and this is how I start my trading day by zooming out, you'll see that there is a level of structure, a level of resistance a little bit higher than this one. And when you have this type of overlapping structure, it typically traps traders, right? Traders will see the first level. They'll look to get short right in here or right at this level. They'll put stops right above those structure highs, right? Because that's the safe place. Look left, structure leaves clues. And then the market will punish them for not being aware of this higher structure level. So a lesson that I learned a real long time ago in my trading was when you have double layers of structure like this, typically the higher level is going to be the more powerful level. That's the one that we want to pay attention to. It's more of a crapshoot. You're more likely to lose some money if you try to get short, especially aggressively in this case, at this first level. And the market kind of proved that to us this week as well. In fact, there's a pretty good saying in trading. I donated a lot of money to the market learning this lesson. There's a pretty good saying in trading that says, if you think education is expensive, because a lot of people complain about needing to pay for education and how dare I need to be taught to trade, right? We have to be taught to be doctors and dentists and scientists and mechanics and really any other job out there, we have to be taught, and typically we have to pay some type of price to go to school. But for some reason, right, trading should be free. I should be able to not get educated and just become super trader on my own, which is foolish thinking, but for some reason we all think it. Maybe it's the gambler's mentality. But the saying is, if you think education is expensive, right, try learning your lessons through the market. And basically that means that if you don't know what you're doing in the market, and especially for those who don't know what they're doing, but they think they know what they're doing, you're going to end up paying more in your dues, right, in your learning experience through the market and losing trades than what you would actually pay for in education. And I always thought that was a really, really, really great saying because I personally experienced that. Real quick, perfect time for a shameless plug. While we're talking about education, if you guys haven't done it already, make sure you take advantage of our 100K discount. We're giving you guys 25% off your entire purchase. The offer expires soon in a couple days. I think Monday is the last day, Monday or Tuesday. So if you're interested, if you're on the fence about any type of educational course, the Ultimate Trader Transformation course, you're going to get about $1,000 off of it once you enter the code 100K, or anything, Constellation, Advanced Pattern, Forex Basics, the live rooms, the DSRs, whatever you're looking at, this is the time to take advantage of it while you can save yourself some money. So the bigger question is, so what's next on the euro dollar? And I really have not, I don't have much interest in this pair until we get to this level, this 117 level. And this is going to be what I call a decision point, where the market is going to tell me what's likely to happen next. It's going to make a decision for me. It's either going to fail to break and close above that level. And if that's the case, if we test it and we have a failure at that level, I will be looking for shorting opportunities, so opportunities to sell. If we get a higher high, higher close, meaning this resistance level fails to hold and we break and close above it, then I think we can see upward movement. Let's just head up to a weekly chart right now. I think we can see upward movement all the way up to, what was it, about $1.20. And it may not look like a lot of room here on the weekly chart, $1.20. Again, look left, structure leaves clues. We're looking at this structure level right here and this one right here. There may actually be a 3-2 Fibonacci retracement as well. Let me just, looking at the chart for really the first time here. Nope, 3-2 is right now. So looking for $1.20. And again, it may not look like a lot of room up here, but when you're looking at 117.50s to about 120s, plenty of room to make some profits. That brings me to another rant. If you guys are new, I like doing random rants inside these videos. I got a comment the other day. Last week, we took a trade on dollar Canada, which we'll actually go to next here. Last week, we took a trade on dollar Canada, and we've been pretty decent with dollar Canada. This is a pair that we've been eyeballing for the last few months here in the Forex market preview and, of course, in our syndicate program as well. And basically, we've called shorts, right? As soon as price action broke this level down here, we've called shorts to 125.50s, and lo and behold, right, price action has come all the way down to 125.50s, and we've been able to make a lot of positive pippage on this pair. And recently down here, as we got to our previous level of structure, we started to consolidate a little bit more, and we actually put in a nice little bat formation in one of our live trading rooms. And it was a great lesson in trading. I didn't have a chance to put it in a trading blog, but it was a trade that filled. It came one pip away from, or a few pips away from profit targets, then came right back down to break even, and basically churned sideways for about 5, 6, 7 hours, right? Before finally overnight rallying up and hitting target 1 and target 2 for about a total of just under 100 pips on the total trade. So it ended up being a good trade, a trade that we showed as an example to our live room members. Hey, if you be disciplined, if you stick to the plan, it pays off. You want to do this. It's a good reminder of sticking to your plan and how patience pays, literally. And I got a tweet from a guy saying, well, Akil, so you're going to tell me dollar Canada dropped 1,000 pips and you only were able to gain 55 pips out of the market, or whatever pips out of the market, he said. That's irrelevant. Why even waste your time? And again, it's another harsh example of just the foolishness that is out there in trading. And not saying that this particular trader is a fool, but many of us are brainwashed by these hopes and these dreams of catching 1,000 pip moves, and that's how you become a successful trader. There are a lot of traders that don't make 1,000 pips in a year. The key is you want to catch your small moves, right? We're not trying to call every top to every bottom. That's how you go broke very, very quick. We're trying to make projections and catch small moves within this moves, right? Maybe every once in a while we can catch the big trade, right? And have a very profitable trade on secondary targets. But typically, your average pippage is going to be pretty small, depending on what time frame you're trading on. It could be anywhere from 25 pips to 50 pips a trade. I would call a 50 pip winner a decent sized win. And it's not about the size of any individual win. It's about how you compound those wins over time. So if you're consistently extracting 50 pips out of the market when you're taking or placing good trades, and you're consistently placing good trades, that 50 pips really quickly turns into 100 pips to 200 pips to 500 pips to 1,000 pips. But if you're shooting for the moon with every single trade, you're going to miss out, and you're going to end up missing out on more money and probably losing more money than if you were to take a normal approach instead of shooting for the home run. But again, random rant. I get a lot of stuff like that every day that just makes my mind wonder. So I randomly bring it up. But we're looking for the same thing here on Canada, bigger picture, right? Price action has come down to the 125 level. We're actually going to let's go back to a NinjaTrader chart just because I have the DSRs here. And you can see we've come to a previous level of structure support. Boom, right down here. I am not interested in selling any more here on Canada unless we break and close beneath this level. Again, I don't want to sell while we're at previous structure lows, right? I would expect some type of relief to come in, right? So I will be looking for buying opportunities next week down in this area if any were to come. But again, just like the euro dollar, it's a decision point. So it's all going to depend what the market does at that level. Remember, we want to be predictive in our analysis, yet reactive in our execution. So we use that if-then thought process. If price action holds and fails to break that level, then I can look for buying opportunity and chance of a relief rally. If price action breaks and closes below that level, giving us a new structure low, then I look for trend trading opportunity to the next level of structure. And that's how you want to set up your week. You don't want to be specific in your analysis, especially your top-down analysis. You want to chart out your different pairs in your portfolio and set up that if-then thought process. What am I looking for? What am I looking for big picture? And then as the week goes on, as we get into the live room and whatnot, then we can take those ideas and then really start breaking them down and finding trading opportunities. Now, speaking of trading opportunities, this is what many of you guys have been waiting for. Some of you guys are like, just show me the trading opportunity, Akil. You're talking all this nonsense, but you're not showing me anything that I can actually trade, right? I want to blindly follow your ideas, right? So here's something for you. Euro Aussie on the daily chart, right? And let's just take a stroll on what price action recently did here on the daily. We have come up. We put in a new structure high right here. We put in an outside return. We failed to retest our previous structure high. We then put in a new structure low right here. This could be a complex pullback. We have then come right back up to previous levels of structure. Again, look left, structure leaves clues. And as we go down to a 4-hour chart, right, you can see we came into a very important level. Again, we just take this downward move and get a little more detailed in it, right? We made a push down here. We then pulled back. We had a very high momentum candle to the downside. And now we've come all the way back. Look at this. Look at the momentum in this move, guys. We've gone all the way from 144.20s to 147.80s, essentially nonstop. And again, look left, structure leaves clues. This is a very powerful candle, this big red candle going straight down, engulfing this entire retracement. Very powerful candle. No surprise that as the market pulled back, right? As the market pulled back to look at this or to retest this level, it's no surprise that we ran into some potential resistance. Now, the question is, where is the trading opportunity? Well, if we go down one more time frame to the hourly, right? Can you guys see it? Anybody? We have an at market 26.18 opportunity. Now, I'm not going to spend a lot of time walking through the 26.18 opportunity. If you're unfamiliar with how to trade it, head over to our website, tradeempowered.com. Click the Learn to Trade tab at the very top and just scroll down here and watch the 26.18 strategy, right? A free training on how to trade this setup. So make sure you watch that if you have not already. But 2618 setup, right? Where price action has created our double top. We've pulled back, right? Lower low, lower close below the middle point of our double top here. And we've come back really past that 618 level to retest previous structure highs, right? If we just draw a Fibonacci retracement in here, you're going to see, yep, our 618 is about 147.40s. We've actually passed that. We put in a lower low, lower close as well. So a potential 2618 opportunity with this type of trade, you're looking for a move back down into the lows. So you're looking for something like this, right? A move back down into previous structure lows. Stops need to be above these highs. You're looking for probably about a one-to-one risk reward at this point to target ones. And if you're looking for secondary targets, you can easily stretch those out, right? To right about this level. This level right in here looks like a good structure level. Again, look left, structure leaves clues, right? Little structure right here. We've got a little structure right there and a little structure shelf a little bit lefter. Yep, lefter is a word, a little bit higher. In fact, if we were to do this as well, let me just see, I'm eyeballing this. I think that's gonna be a 1618. If I take a Fibonacci extension from our swing high to our swing low, back up. Oh, look at that. 1618 Fibonacci extension right at that level. Do we get a Fibonacci retracement there as well? 50%, 50%, 50%. Give it to me, give it to me, give it to me. Not quite. So not getting the double retracement. So we have a 618 retracement right here. We have a 382 a little bit higher. Anywhere in this zone, I think is going to be a good level to take secondary targets, maybe 46. If you want to be safe, maybe 46.50s. That's a nice psychological number as well. But this is an at-market trade for you guys that trade the 2618 on the open. Again, watch out for gaps or whatnot, but assuming we have an honest open, watch out for this pair. This is an at-market buying entry. And it's an interesting pair too, because the Euro and the Aussie, not to get too fundamental, but these have been basically two of the strongest pairs as of late. The Euro has been extremely strong with the idea that there's going to be tapering in the easing and whatnot. And the Aussie has been very strong as well, as traders are taking more of a risk-on approach, where in the past we've been kind of safe haven, safe haven, safe haven. Now that, you know, the dollar isn't so safe anymore, instead of bouncing to the yen, which is the other safe haven pair, people are feeling like they can afford to be more risky. So we've seen some very big moves in pairs like the Aussie and the Kiwi as well. So this is an interesting pair because it's essentially a battle between the two strongest currency pairs right now. But that has nothing to do with the chart, just an interesting side fact. So hope you guys enjoyed this video. Again, I'll be looking at Euro Aussie on the open. I'll be looking at Euro Dollar this week in the live room, seeing how we react that previous structure. We'll be looking at Dollar Canada as well. There's a few other pairs on my radar that I just didn't have the time to put into this video. And Euro Aussie, this is a good at-market trade for you guys on the open for anyone that trades a 2618 opportunity. And again, remember, this discount ends soon. You can see the little countdown clock. By the time this video gets posted to you, by the time you see it, it's probably going to be a lot less. So head to tradingpower.com/100K. Take advantage of your 25% off. And I'll see you guys next week. Take care. All right, traders. So I hope you enjoyed today's video. And if you did, please show us by hitting that like button and subscribing by clicking the button right below. If you're looking for more educational content, feel free to head over to our tradingpower.com website, or also take a look and you'll see more videos available for you. Have a good one.